money comes as a seed and as bread. So bread means that expenses, eating, spending it, consuming it, and seed means investment. Let your money be put to work, or your money has to be working for you. Now, if you are actively working, which we talk about active work or active income, when you earn an active income, you need to put it into an investment that will give you a passive income, or you build an investment portfolio that will be generating you multiple streams of income. People think that when they have this rule that when you earn, you spend, you save some, or you invest some. So the first thing that comes into their mind when they earn money is spending. When you earn money, the first thing to think about is what? Investment and growth. Before you even think of what? Savings and spending. Savings is required so that you can what? Have some money to invest. Then riches are cash based. Riches are cash based. When somebody is rich, meaning that the person is having a lot of cash. When somebody is wealthy, we say somebody is having a lot of money. Wealth is what? Asset based. Asset. He has a lot of asset that is generating income for him. Opposite of asset is what? Liability. Liability take away money from your pocket. Example, if I have earned 4,000 and I've accumulated it to gain, let's say 20,000 plus or 50,000. If they release iPhone this September or this August and I take that money to go and buy iPhone, the question is, how much is the iPhone bringing into my pocket? If the iPhone is not bringing you money, then it is a liability. It has taken money from your pocket. But if you will use the phone to build courses, to do videos, to record things, generate money, use it as a money-making vehicle, then the phone becomes what? An asset. Welcome to today's episode. Today is part 2 of what we started last week on the topic 4 financial management system that everyone needs to master if you want to become financially free. You need to master these 4 financial management system. The first episode was on income. We briefly looked at the definition on what is financial management system, which we said financial management system is a structured, repeatable set of habits, tools, and processes you use to intentionally or handle money intentionally. So it serves you instead of controlling you. So the key point here is that 1, you need to first of all have a structured system for your money, your income that is coming in, or your money that is coming in. 2, you need to have set of habits that will help you achieve your financial goal that you have set for yourself. So you need to put your set of habits in check. Is this habit making me spend more money, or is making me gain more money or protect money? Then you need to look at tools that you can use to track where your money is going, how your money is being multiplied, all these things. Then processes that your money has to go through to multiply, or processes your money have to go through to come to you. So those were the things that we learned in the first episode. So today we are continuing. And we said that this financial management system goes beyond budgeting. Budgets consist of income, expenses, that is income, expenditure. It ends there. Then how much is left? But this financial management system goes beyond just budgeting. It talks about the income. It talks about how you protect it, how you save it, how you invest it, and the return that is coming in. So we are looking at the framework that it covers. 1, earning, protection, grow the money over a time frame. In multiplying your money or growing your money or increasing your money, it is over time. It has got something to do with time. Then lastly, how you spend it so that you don't consume all that was given to you. In the first episode too, we also learned that money is being made by 3 ways. That is by service, that is by investment, and that is by selling a product. So that is how money is being made. Then we also learned that money comes in 2 forms. Money comes as a seed and as what? As bread. So it means, bread means that expenses, eating, spending it, consuming it. And seed means what? Investment. Today's episode is on the subject, or is on one of the 4 financial management system called investment and growth system. Investment and growth system. That is what I want us to look at. Why? Somebody will say that when we earn money, we spend it. But I want to change the scenario, because people think that when they have this rule that when you earn, you spend, you save some, or you invest some. So the first thing that comes into their mind when they earn money is spending. So for us, I want us to look at, when you earn money, the first thing to think about is what? Investment and growth. Before you even think of what? Savings and how do you call it? And spending. So sometimes some people interchange savings with what? Investment. They are 2 different things. But today I want us to keenly look at investment. When you earn money, your salary comes in. We'll be using maybe a typical example of somebody who earns a salary of what? 4,000. So just try to equate your salary to the 4,000 range, and you can apply the same rule to it. So let's look at, okay, so I was even defining the difference between savings, riches, and wealth. So let's look at what savings is. Savings is not an investment. Savings is required so that you, in order to what? Invest. Savings is required so that you can what? Have some money to do what? Invest. Then riches are cash-based. Riches are cash-based. When somebody is rich, meaning that the person is having a lot of cash. When somebody is wealthy, we say somebody is having a lot of money. It means wealth is what? Asset-based. Asset. He has a lot of asset that is generating income for him. Somebody who is rich, meaning that he's actively working and cash is coming in. So that's cash flow. So now let's quickly look at the definition of what? Investment. Now, the passage we read in Matthew 25 verse 14 to 30, we'll be looking at 16 and to 19, which says that 16, the man who had received 5 bags of gold went at once and put his money to work and gained 5 more bags. 17, so also the one with 2 bags, also 2 bags gained 2 more. And 18, but the one who had received 1 went off, dug a hole in the ground, and hid his master's money. 19, after a long time, the master of those servants returned and settled account with them. So this is the passage that we read in the first episode. So let's look at it again. Now, when we talk about investments, it means that you need to let your money be put to work, or your money has to be working for you. Now, if you are actively working, which we talk about active work or active income, when you earn an active income, you need to put it into an investment that will give you a passive income, or you build an investment portfolio that will be generating you multiple streams of income. So let's define an investment. Investment, as far as salary is concerned, is the step you take after savings. So before we can invest, we need to do what? Do savings. But savings is part of one of the 4 financial management system. I intentionally skip it for a reason, but for us to look at investment first. So what I want to reprogram your mind that when you earn money, the next action is to do what? Is to invest. That's why I am doing it like this. So it is the step you take after savings, where you put a portion of your salary that saved money into assets, or financial product that has the potential to gain over a time and generate returns. So those returns that you get are the profit, the dividend, the capital gain, or a rental income. So when this investment is a step you take after savings, it is the step that you make your money work for you rather than you working actively. So there are two different things here. In the income management system, you will work to get the money. But in the investment and growth system, the money that you have saved and you are investing supposed to work and give you more money. That's how it is. So we need to master these habits. It's a habit we need to cultivate. It is a system processes that we need to pass through. And it is very, very, very what? Important. So here there is a word called assets. So when you earn money and you put it in asset, automatically it's supposed to give you a return. Assets are things that put money into your pocket. Liability, opposite of asset is what? Liability. Liability take away money from your pocket. Example, if I have earned 4,000 and I've accumulated it to gain, let's say, 20,000 plus or 50,000, if they release iPhone this September or this August, and I take that money to go and buy iPhone, the question is, how much is the iPhone bringing into my pocket? If the iPhone is not bringing you money, then it is a liability. It has taken money from your pocket. But if you will use the phone to build courses, to do videos, to record things, or to generate money, use it as a money-making vehicle, then the phone becomes what? An asset. If you have invested in businesses, in companies like shares, and they are giving you return, meaning that you have invested what? In assets. So, unlike just like saving in a basic account, which often loses value to inflation, investing aims to make your money work harder for you, beating inflation, 1. 2, building wealth towards goals like financial freedom. So the investment opportunity that you are investing in is to beat inflation, number 1. Inflation means that your money does not lose its purchasing power. So example, some time ago we used to sell the same size of bread as 5 cedis. Today, that 5 cedis has lose its purchasing power and we cannot use it to buy that bread again. Today, if you don't have like 20 Ghana cedis or 50 Ghana cedis, you cannot get a good bread to buy. Even you can't even get bread 5 cedis. If you get a slice of bread, then meaning that it is, just imagine how much the size that they are going to cut for you. So for you to beat inflation, you need to invest your money into system, into vehicles that will beat inflation, meaning that the return that they are giving you will double your purchasing power so that in the next 10 years, if the same bread size which was sold some years back, now which is 20 Ghana cedis and 50 Ghana cedis, as at the time I'm recording this video, in the next 10 years to come, we might even buy that bread close to, let's say, 100 Ghana cedis or even 150 Ghana cedis. If it's in dollars, I don't know how much they sell bread in dollars, but if it is, let's say, $2 or even $5, as at the time I'm recording this video, which I've not done research on it, but I'm just assuming, in the next 10 years to come, it might even go to, let's say, 10 or 20, or maybe it could even be more than that. So you need to put your money into systems that will help you gain your purchasing power when into the future. when you want to buy something. So it is very important we do what? We invest. So in short, savings, just saying something small about saving. Savings is equal to keeping money safer for later use. But investing is putting saved money into something, a machine that can grow it with some level of risk. So have it in mind that the investment that you are going to do or you are going to embark on come with some level of risk. Every investment and its level of what? Risk. So you need to know these things before you do what? You invest into them. So now quickly, let's look at two categories of investment. There are two types of investment. One, financial market. Financial market is number one. When mostly we talk about investment, our mind quickly goes to what? The financial market. So what are some of these financial market? What is financial market? It's any system or place where people buy and sell financial assets. It's where people buy and sell financial assets. Don't worry, we'll be looking at some of those assets. What are those assets? One, money market, stocks, bond, currency, commodity. These are financial markets, like the US stock market, London Stock Exchange, Ghana Stock Exchange, South Africa Stock Exchange, Kenya Stock Exchange, Malawi Stock Exchange. These are all financial markets where they trade, they buy currencies, commodities like oil, like gold, silver. Those are commodities. So if you are not buying shares or you are not buying stocks, then you are buying commodities. So that is number one category of an investment. Now, think of it, and this is how the economy runs. The economy's engine room, where money flows between people who have it and people who needs it. That's how the economy runs. So today, what do I need? I need $1 billion. Who is having that $1 billion? What do I need to do to gain that $1 billion? So the haves and the needs. So the need people have to provide service, have to do something to the haves. Then the haves will give them that what? That 1 billion. So that is how it is. That is how the economy runs. So example, like I stated, the stock market is buying and selling company shares. The bonds, that's the government and corporate debts. Then the stock market, some of the financial markets is what I'm saying. The stock market or the forex market deals in currency. The cryptocurrency market deals with what? Digital assets. So these are financial markets that you can think of or name. Stock market, bond, forex, and what? Crypto markets. Number two category is business market. Business market is a place where physical or digital markets, where buyers and sellers meet to exchange goods, service, or assets. So in the business market, it's like going to markets, the Takrady market, Accra Makola, Kumasi market, or going to Kenya, their markets, I don't know the name of the market, but a market where they sell things, goods and services. Then you do what? You exchange your money for what you want, that goods that you want, or you exchange that goods for the money you want. So example of this business market, we have the farmers market. The farmers market is where they farm and they bring their goods to the market for what? Consumers. The housing market, we have the people who build real estate. They are renting it. Your landlord are all these people falls into what? The housing market. Events, centers, recreational centers, all these people falls under what? Housing market. Then we have the job market, where we have the doctors, the lawyers, the engineers, all these people do what? Goes to those markets. The energy market, electricity, solar, oil, crude oil, this energy market, people need it. So people go there to do what? To go and trade. Then goods market, aside all the ones that I've mentioned, this goods market is to go, they do buying and selling of goods. Anything that human needs. So all these things falls under what? The goods market. So we have two types of what? Investments, or two categories of investment markets. That is the financial market and the business market. So what I'm trying to say is that these are areas you can invest in your money. So ask yourself, where do I have enough knowledge, the skill, the ability to invest my money so that my money will generate income for me? So these are the areas where you can invest your money. The big idea for salary earners, some notes to just define. Your salary is an active income that you have worked for. Investment creates passive income, capital appreciation over time. So eventually your money you earns more money without you trading your time for it. So this is the secret. Investment is the one that the money works for you. You don't need to put in much energy, much time, continuously, no. That one-time energy you put in creating that investment portfolio, it should be able to generate you money. So you need to be very careful which type of investment you are putting your money to. This is how many moves from paycheck to financial security, then financial freedom. So let's look at some reasons why you need to invest your money that you earn from your salary, or you earn through your salary, or that comes in. One, inflation. You need to beat inflation, as I said earlier on. And in Ghana, inflation is something that it's not a joke. The moment you play with it, your purchasing power is gone. Your money will depreciate, especially the people who are having savings, the people who are doing susu and keeping it in credit facilities that no profit is coming on it. They are losing their purchase power. They have to look for, yes, you can use these credit facilities or this savings account to accumulate the money over a period. Then you shift that money into what? An investment or high earning savings account. So you need to really beat inflation. So how do you beat inflation? One of the things that you can use is treasure bill. So in Ghana, if you want to really beat your purchasing power, you have to look for treasure bill and put your money there. Treasure bill comes with a return on investment between, some time ago, I know is somewhere 3%, 6%, and I think 10%. I don't know if it is still like that. But as that was some few months, the beginning of this 2026, that's how the interest rate became very bad. But it is also better than your money sitting down idle and not gaining any interest. So you take note. So we have 91 days, we have 182 days and 364 days in a year. Each come with their own interest. Number two reason why you need to invest is constant monthly investment. Even small amount, use compound interest to multiply your money so that there will be a return on your investment. You have to constantly be what? Investing. Then build towards passive income streams, or passive, or in other words, multiple streams of income. So these are reasons why you need to really invest some portion of your salary. Then let's look at key principles for salary earners as far as investment is concerned. Number one, only invest what you have saved. For the fact that we are preaching investment does not mean that you put all the money you have earned into an investment, then you start going hungry. No, that is not what we are preaching, or that's not what we are teaching. At least apportion some, because money comes in two forms. Part as seed and second as what? As bread. So you need to save some, or the one that you have saved is what you are supposed to do what? Invest. Number two reason is start with low risk. If you are a salary earner and you are now a beginner to, or you are now coming to start savings or investment, I would advise you that you should start with low risk. Don't go and put all your money in those Ponzi schemes. I have been a victim. I've lost money. I lost a lot of money. I know a lot of people also lost a lot of money. So don't become a victim to this. Then diversify. Don't put everything in one place. Number four, automate. If you are somebody that have discipline issues with money and you cannot deposit yourself, then automate your deduction. As soon as the month end, the bank should automatically deduct and send it to your investment for you. So now let's look at practical investment options in Ghana that you can invest your money into. Number one, treasure bill on the list. This is one of the safest, or which became one of the safest options, because it's the government that is borrowing the money, and government will always do what? Stick by his words. So you have to invest in what? Treasure bill. Number two, mutual fund. So this mutual fund, they are pool of money managed by pros. Like they have fund managers that manage this kind of investment. So the second option is to go for mutual fund. So what are some of these mutual funds? They are money markets with low risk, and the return is kind of like steady, is better than savings. So these kind of mutual funds, they found themselves between 6%, 8%, 10%. They are not all that high. Their risk level is quite low. Then we have balance and equity funds. These falls between 20 to 30% return on investment. So please, these are, I'm just giving you examples of financial market that you can invest in. But before you go and invest, please do your research, consult a financial advisor or consult an expert in these things before you put your money in it. I'm just giving you the idea, the concept, the opportunities out there. Then we have the popular ones, such as data bank. So you can have some of the mutual funds markets, such as EPAC, fixed deposits, and you can even find some of them on IC Wealth, IC Liquidity. All these things are money mutual funds. So the percentage is not all that huge. So these are some of the money market fund. Then we come to number three, that is fixed deposit. These fixed deposits normally comes with banks. So banks will lock up your investment for, let's say, between 6 months to 36 months. And the rates falls between 10 to 15%. And it's more or less like you are loaning your money to the bank, and the bank is working with it, and they are giving you a return. So that is fixed deposit. Then number four, we will come to, but between these 10 to 15%, it depends on the bank terms. Some will give you low, some will also give you high. It depends on the financial market or the time of economy that we find ourselves. Then we have the stock markets and or Ghana Stock Exchange. Now, follow us or subscribe so that when we share our video, you'll be the first person to come across. Share these videos for others to also see. See you in our next episode. Bye-bye. In the stock market, companies are listed on the stock market. Companies such as MTN, some banks such as Ghana Commercial Bank, EcoBank, Cow Bank, Republic Ghana Bank, ADB, Société Ghana, Société Générale Ghana Limited, Access Bank, Zenith Bank. Then we have some other companies such as Zen Petroleum, Kasapreco, Farm Milk, Goyle, and Bob. That is Benzo Oil Palm Plantation. So all these things, they are companies that are listed on the Ghana Stock Exchange, where your money will be used to buy a piece of a company. Now, let me explain something here carefully. In the stock market, there are two people that determines the market: the buyers and the sellers. That is how the stock market runs. We have the buyers and the sellers. Now, the buyers are the people who are putting in the money into the market so that the value of the market will go high. Now, the sellers are the people who are selling their positions in the market to gain their money back. And when they sell their position, meaning that the value of the shares are going down, so the market goes down. So these are two people with their respective emotional behaviors. Now, aside these two people, there are some economic factors, or there are some factors that determine how the market behaves or moves. We have the behaviors of these buyers and the sellers. Two, we have economic factors such as maybe somebody is selling his company. Like, let's say, one good news this week was that Eyramax is named as the first trillionaire in the world, and because of his IPO that he was selling in SpaceX. So this is a very good financial news. So meaning that investors would like to do what? Pump in money into the system. So with this good news, it is also going to affect the financial market positively, globally, locally. So some of these things dictate the direction of the market and the behavior of the market. So that is how the stock market behaves. So the fifth money market that you can put your money is, or areas you can put your money, invest your money, is real estate. Real estate. Now, when it comes to real estate, the first thing that comes into people's mind is to build a house and rent it or sell it. Now, there are some other real estate areas that you can also invest in. Number one is land. Now, I always say that when you are investing in land, invest in the type of land that will not be lying down for the 5 years, for 10 years, and you are now coming to build on it. No. Invest in lands that you can rent out for events, you can rent out for farming, that will be giving you either daily money, weekly money, or monthly money, or yearly money. So you need to look at the type of land you are investing in. I'm not talking about the land that you go and buy and put it down when you are having money before you go and buy. No, you are investing in the type of land that you can rent it out and be making money along with it. Then under the real estate, we have both rental properties or rental units. So this is the one that you build, the popular one that you know. You build houses and be renting, or you sell. Then recreational centers. This is also similar to that of land, but example like His Majesty area is a recreational center where it's a tourism, people can visit, have fun, challenge themselves, take risk, embark on fun games, or a place that you can send somebody, you can have fun, you can play around, or a recreational center that you can go there, like a library event, or there are some games, activities that you can have fun there. The event centers, you have a space that you can rent out for events. It could be weekends, daily events, weekly events, whatever event. Then we have farmlands that you can also do what? Rent. So you have a large space of land, 100 acres of land, 200 acres, 2,000. You can be renting those land space out for people to come and rent and do farming on it. So basically, then the last one that you can invest in is your pension. In Ghana, we have something called tier 2, tier 3. That is your pension. Then SNIT. But the pension that I'm talking about is tier 3. This is the one that you contribute personally into that account or optionally. With this type of investment, you can personally contribute into your pension fund to increase the investment in it, so that by the time you will be due for retirement or within a certain time frame, you have enough money to do what? To use it for a project or something like that. So these are things that you can invest in. Now, let's quickly look at somebody who choose not to invest in the financial market. What are some of the areas, businesses that you can invest in? So I've categorized it in terms of the capital that you are investing in. So let's say very low capital, between 500 Ghana cedis to 1,000 Ghana cedis. These are the businesses that you can invest in. One, mobile money business. I'll just be listing them. Mobile money business, whereby you'll be transferring e-cash for physical cash. Then, or you take the physical cash and send e-cash to people. Then petty trading, provision store, toiletries, selling sachet water, snacks, drinks, phone, credit, and all those fast-moving items. So those are petty trading, provision business. Then we have second-hand clothing, that is bend-down boutique. So you can go into that fashion accessories. Then you can go to phone accessories and charging accessories. So you send phone chargers and all those things. These are businesses you can invest in. I'm just giving an example. Then pure water and sachet water distribution. So you can probably have the company by yourself, or you can buy the sachet water from a sachet distribution company, then you will sell it to consumers. Then we have snack and street food vending. Snacks and food, street food vending. So these are areas that you can invest in. The online reselling. Online reselling. So you can have an online shop like your WhatsApp, Facebook, YouTube, X, and you can turn them into what? A store, and you sell goods and services over them. Then we are looking at low to middle income capital. So between 5,000 to 30,000, businesses that you can invest into are laundry and dry cleaning services. So these are some of the businesses that you can invest in. Then food vending, chop bar, street meal, then sell banku, jollof, like fast food restaurant and all those things. Those are things that you can also invest into. You can also invest into poultry farm on a small scale, between 100 to 200 beds. You can manage around that one. Then you have photography business, mobile photography business, videography and printing services, photocopy and all those things. Then waste collection is one of the booming businesses. Now when you have this tricycle, you can move. If you find yourself in a whatever neighborhood you find yourself, every day people are generating waste, and you can have this tricycle and be collecting waste and be charging them daily. Then we have herbal product and skincare making and selling, local soap and all those things. These are businesses that you can invest in. Then let's look at, last but one, the medium capital between 30,000 to 100,000. The businesses that you can invest in, that is a provision shop or a mini supermarket. Then you can also invest in cold store or frozen food business. Then You can also go into this sachet water manufacturing or production. That is, you have your own borehole drilled and you get this spring water and you do the sachet water and you sell and distribute. Then we have real estate agency, brokerage. You can also go into that. People have bought their real estate and they will come and register with you and you'll be selling their real estate for them for your commission. Then you can also go into computer refurbishing and phone repairs or phone sales. Even if you are selling an iPhone, you need between let's say 5,000 to 20,000 plus. So just imagine one phone costing that amount. So with 100,000, you can only get, even if one is even costing 10,000, that means 10 of it is even 100,000. So that's why I said this falls under 30,000 to 100,000. Then transportation business, Okada, the popular one, Okada. So if you have auto rickshaw, which people call pragya, or you can also go into the tricycle and buy a tricycle or motorbike, you can do this transportation business between one point or one community to another. Then event equipment rentals, renting out or hiring out plastic chairs, wedding decor, event decor, and all those things. These are things that you can invest your money into. I think one of the booming businesses before COVID was this event planning rentals. So these are things that you can invest into. Now, quickly, before we draw our curtain on today's topic, tips to consider before taking the bold step to invest. Now, consider the location before you invest in. People there, how busy is the area? How can you draw traffic to your business? Then you need to have your registered business and the marketing. Which platform are you marketing your businesses? Is it Facebook, WhatsApp, YouTube, X, Instagram, Snapchat? All these platforms you can market your business. Then risk management, starting small, making money and reinvesting into it. These are some tips that I want to give you. So some time ago, like I was saying, the popular high demand in these areas are food, water, health and beauty, waste management, digital service, agri-processing, and fintech related side hustles are growing. So if you want to build or invest your money, look at these areas that are in high demand right now. Food, I repeat again, food business, water business, health and beauty business, waste management, digital service, then agri-processing and fintech. These are areas that you can really invest your money into. So take your last note before you go. Many of these can start even small and grow with reinvesting the profit into it. Success depend on consistency, customer service, and adapting to market changes. So if you really want to strive, this is the last tip I'm giving you. So today's topic is investing and growing system. This is where we've ended today. If this is your first time of coming across our video, kindly join our community by subscribing, and so that anytime when we share our video, you'll be the first person to come across. Share these videos for others to also see. See you in our next episode.